What is going on, everybody? My name is Arjun and welcome back to my channel. I'm a little dressed up today, rocking this leather jacket because I want to talk about an important topic which I know I've been thinking about and maybe some of you all are thinking about as well, and that's the impact of the elections on the US stock market. The election day, November 3rd, is less than 2 weeks away. Can you believe that? I feel like this year has just flown by. It's like it was January, February, March, and then boom, we're at November already. We'll get to know if Donald Trump continues in office or whether there'd be a power shift and the Democrats and Joe Biden will take over. The 2020 elections are one of the biggest and most important in history. So I thought it'll be interesting to have a look at past elections and see how the stock market has reacted to those. So in this video, I'm going to be talking about the US elections versus the stock market, both before the election, immediately after, as well as trying to understand a more long-term perspective. I'll also try and keep this video as non-political as possible because I feel like it does more harm than good, and that's not something that I want to get into. Most of this video is going to be based on facts as well as historical data, so I hope that it's taken in the right way. In the past, as we're approaching closer and closer to the election, data has shown that uncertainty in the market tends to increase. And this makes sense because the general public is uncertain about who's going to win, and because of this, they're unsure about the policies and ideas that would be implemented. This uncertainty creates fear, it creates doubts, and investors hate this. This can cause extremely high volatility in the market, and data from Morningstar backs this up. This chart shows the split of equity funds, which are essentially stocks, versus money market funds, which are essentially safe cash equivalents, by presidential year. In the year of the election, investors tend to play it safe by doubling down on money market funds and just waiting it out. Then, once the uncertainty dies down post-election, they move towards more risky assets like stocks, and you can see the balance shift in the opposite way. In 2020, we saw this amplified to an even larger degree, but most of what we saw was pandemic related as opposed to just the presidential election. Reports also go to show that when a reigning president gets re-elected, markets tend to grow by around 6.5% on average. And when a new party comes into power, the average drops down to around 5%. This again points to the fact that when things remain the same, investors know exactly what to expect, and that results in a positive sentiment. But will history repeat itself this time around? No one knows. But here's actually what's more interesting, and I was quite surprised when reading about this. Market performance based on which party is in power. I was always under the impression that Republicans were pro-business, they had looser regulations, and were in favor of policies that enhance shareholder earnings. On the other side of the coin, I thought that Democrats favor redistribution of wealth, social rights, as well as less friendly business policies. So I thought this would result in lower performance. But the data actually tells a completely different story. This Forbes article shows that the S&P 500 returns have been higher when a Democratic president has been in charge. Even when removing some outliers like the dot-com crash, for example, the same point still holds. However, the same article goes on to say that there's no evidence suggesting that the president's party has any significant impact on the market. Because there are so many factors at play like valuations, corporate profits, and business cycles, the actions of a single government are far less important than you would actually think. There's correlation for sure, but that doesn't necessarily mean that there's causation. So does the election have a significant impact on the US stock market? Not really. Something else that I haven't spoken about in this video that we're all living through in 2020 is of course the prevailing pandemic. And nothing in history is going to tell you anything about this. Trump was criticized pretty heavily for his management of this crisis, which resulted in over 200,000 Americans losing their lives. Obviously, the markets will be impacted by how quickly we're able to get a vaccine. In the most recent debate, Trump said that we could have a vaccine before the end of the year, and just casually name dropped some companies on what is international TV. Now, I don't know whether this is possible for them or not, but hey, no pressure, right? Just as a side note, I am so relieved that I don't have to sit through another presidential debate for the next 4 years, because watching these two candidates argue for probably what's the most powerful job in the entire world, like a bunch of school kids, was painful to say the least. You also have to consider the impact of the virus on the election itself. With mail-in ballots and difficulty in counting votes because of this, we might not even have a winner on election day. And as you know, that creates more uncertainty, which creates more volatility in the market. Overall, here's my takeaway from all of this. There's likely to be short-term volatility all the way through the end of the year because traders are impulsive. If something unexpected happens and the media focuses on this bad news, it is possible that there's a market sell-off. So I myself have a pretty decent cash position with just money sitting on the sidelines, waiting to take advantage of deals if and when they pop up. If great companies go on sale these next couple of months, I'll snap them up in a heartbeat. But the important thing to remember here is that no matter who is in the office, markets have tended to go up in the long term. Companies with good fundamentals, adept management, and a solid plan for growth will continue growing irrespective of who sits in the White House. As long as these companies continue to innovate and find ways to grow their business, America will be fine for the next 10, 20, 30 years even. The best analogy I've heard about the stock market is this. Imagine a man walking up a mountain playing with a yo-yo. The path that the yo-yo tracks is the journey of the stock market. Yes, in the short term there will be ups and downs, but in the long run, just like the man walking up the mountain, the market tends to go upwards. The problem here though is that most people focus on the yo-yo and its ups and downs and completely lose sight of the man who's constantly walking up the mountain. But hopefully if you're a viewer of this channel, you understand the importance of not focusing too much on day-to-day movement and being a long-term investor. By buying diversified investments and just trusting the process, you're likely to come out on top in the long run. Of course, I'm a firm believer in this as well, which is why I'm going to continue buying into the market irrespective of what happens. I'm also curious to hear your thoughts, so let me know in the comment section down below what you think the markets will do after these elections. After saying all of this, the last thing I want you all to do is just go out and follow what I've said in this video blindly. I am not a financial advisor, and always do your own research before investing in anything. If my content brought value to you in any way, please consider liking this video and subscribing to my channel for more updates like this. It would really mean a lot to me and would help the channel grow. You can also follow me on Instagram at Finance with Arjun, where I post about what's going on in my life as well as the world in general. If you're interested, I leave a link to my profile in the description box below and you can go check it out. With that said, thank you so much for watching. I'll see you next time.